Now with the platform, you can create a number of different scenarios. So down here on the planning projections page, we can copy a scenario and make an alternative scenario. Now it's important to highlight that when you're creating different scenarios, all of the values in Discovery and Foundation will affect all of your scenarios equally. So if I make a change in expenses, it will affect all of your scenarios equally. If you want to make scenario-specific changes, there's 3 sections that you can make scenario-specific changes. So one is in future cash flow. All you have to do is select the scenario that you want to make a change on, and you can change any sort of income and expenses assumptions within the future cash flow section. You can also do this in projections as well. So if we go to projections, that's the other way you can make scenario-specific changes. In projections, you can make a copy of a scenario. You can go down here to income or expenses. You can make changes to the scenario specifically with an override. So property tax or spending. We've already got an override here in personal. So we've increased travel spending in the first year of retirement from $18,000 to $28,000. All we have to do is double click, enter a new dollar amount. And it's important to remember that all of the expenses are entered in today's dollars. So that's why you see that there's no inflation adjustment. That inflation adjustment comes here after, where we calculate the future dollar expenses. But we can also make changes to this scenario in terms of RSP withdrawals or contributions, TFSA withdrawals or contributions, even debt payments. So we could, for instance, pay off the entire vehicle loan in 1 year, by adding a large payment and then recalculating, and the platform will just pay it off all automatically. If we want to take out an override, we just do clear override and we can recalculate, and then we get back to the original projection. So lots of flexibility in terms of creating scenarios. The last place that you can make scenario specific adjustments is in the CVP and OAS start age, the estimate here. So we can pick a specific scenario and we can adjust the CVP or OAS start age for that specific scenario. So if you want to compare starting CVP at 60 versus 65 versus 70, you can have 3 different scenarios with different CVP start ages to understand which might be better given your situation. So it's important to understand that anything in Discovery and Foundation, other than those 3 specific sections, future cash flow, CVP and OAS, and projections, all of the other sections will affect every scenario equally. Now, this is also beneficial because if you forget to add an expense or income, you don't have to change each scenario. You just have to make that change up here in Discovery, or you make that change here in buying or selling a house. Whatever changes you make in those different sections will affect all of your scenarios equally.